What is up, YouTube? Welcome back to Stocks by the Numbers, and today I wanted to do another quick update here. How did I do? Let's review, I guess we can classify it as, but I wanted to take a look at a company that I know a lot of you were watching, and I know some people stepped in for the long term. They were hoping for the best. Other people were looking for a little short-term play, looking for a quick little trade, and in the short term, last time I made the video was right here. It was on a Sunday, actually, June 4th, so right before this Monday, the 5th. And the stock was at $2.23, and as we see, we had a little up, we had a big down, so let's find out what's going on. Name of the company we're looking at is FuelCell Energy Inc, ticker symbol FCEL, listed here on the NASDAQ. The stock now is only 1 cent off of these new lows. It's sitting here at $1.32. It's down 4 cents, a little over 2.5% here on the day, and this was, where are we going back to? Monday, August 28th was when this same 52-week low price was hit, and basically I have to pat myself on the back, as much as you guys may not want to hear it, because I went back, I just watched that last fuel cell video I made back here again, June 4th, the Sunday right before that Monday, and I basically said that, yeah, you could have a rally up going into these earnings here on June 8th, and as we see here, big miss on the EPS side, but a huge 50% plus beat on the revenue side, with the company coming in with $38.349 million on estimates of $25.494 million. So that actually, of course, is a good sign. However, again, we fast forward to the last quarter that came out just a few days ago here on Monday, September 11th, and as we see, estimates of $27.68 million, and the company, of course, inconsistently comes in under analyst expectations after a very nice beat of 50+%, and they come in with $25.51 million, missing by almost 8%, however, beating on the EPS side. So this is literally exactly what I told you guys would happen. It basically almost happened to the T. The only thing that did not happen was this potential short squeeze maybe that you guys were looking for. So I did say that it could even pop up to $4 or $5 and pop out of this wedge on this short squeeze that you guys are talking about, but it will most likely immediately give it back. Or another scenario is the company comes out with earnings, and I said that you're going to see a short-term pop, which we saw, as we see here, top of the screen, the O, the H, the L, the C. That's the open, the high, the low, the close. And you can see it hit a high of 294 from that 223 level just within about a week after these earnings coming out. And then what happens? Hits the high of 294 and immediately goes into free fall mode, hitting new 52-week lows of $1.31. And again, I feel it is because of the inconsistencies that we have been seeing. Again, to go back to look at some of these earnings reports since we drew out these trend lines here, going back to the beginning of 2022. As you see here, big miss on the revenue side, then a nice beat on the revenue side, then a big miss on the revenue side, then a nice beat on the revenue side. And this is just going on and on and on. We have a miss, we have a beat, we have a big beat. That's like the first back-to-back beat, if memory serves correct. And then what happens? They come in with a miss. And now we move forward, and you can see next quarter, $26.8 million, right? Yet if we back it up here, look, $38 million, $37 million, almost $40 million, north of $40 million, right? So this is what I'm saying. Again, I can appreciate the fact that you might like the company in the long term, but like we always say, it's all about pricing and timing. And regardless of how much you didn't like my video when I did it back on June 4th, I knew, sure as hell, that the stock was not a buy at 2.25 or 220, wherever the hell it was. And as you see, like I always say, I would rather miss out on a short-term pop or rally and wait for confirmation before I step in and pay X dollars per share or whatever the heck it is. And again, immediately, within a few days after the video, right here, you could have left a comment or messaged me in Discord and said, haha, you got it wrong, the stock's at 290. And then obviously a week after that, I could have messaged you back and said, now you know who's who in my line of work, right? So now you can see this is why I speak to you guys and talk about these stocks the way that I do. Because again, nothing is guaranteed. I can't guarantee or cement anything for you guys. But again, I was very, very highly convicted that this stock had no urgency for anyone to buy it. And listen, if you stepped in here at 2.25 and you rode this wave and you sold at 280, 290 here, fantastic. Well done. Congratulations. But again, for all of you long-term holders, I basically called out that this was exactly what was going to happen. You were going to potentially see a short-term pop, and it was going to be short-lived. And now, as we see here, we went from what? 223 to 132, which is, 90 cents on 223. So I don't know, what's that, like 35, 40% or something? So if you were thinking about taking a position in FuelCell and then you saw my video at 223, I just saved you roughly a 40% haircut. So you're welcome. Obviously, if you're involved in the stock long term, this is not what you want to see. However, again, we looked at the potential forecast estimates for the company over the next couple of years going into 2025, 2026, and we can see that estimates of their revenue are jumping up to 300 million, 400 million in change in 2025 and 2026. So down the road, several years from now, this one can absolutely work out very well for itself. My point was, you're better waiting for confirmation of consistent revenue and of a more stable income and business overall before you step in and take a position in the stock. And again, like I said, save you about $1 a share going from 223 down to 132. So obviously much more attractive here at this level as opposed to this level. However, I know that I'm kind of beating the crap out of the stock right now, but I will say this, because however dark the cloud, like we always say, there is always a silver lining. And the first thing I want to look at here, if we go back to August 28th, again, top of the screen, the O, the H, the L, the C, open, high, the low, the close, and you can see the low, $1.31. And now we see today we have a low of $1.31. Now, granted, the stock right now is sitting at $1.32, so it's obviously right near that low of $1.31. However, if that potentially right now is the bottom of the bottom at 131, what we now have today, hoping again that this stock does not go below 131, what we are potentially having in the short term is a double bottom. And in my opinion, it will probably most likely bounce from this level. Of course, if it does not break down, it will bounce from this level and should probably get back maybe close to like this mid-range of this wedge, but probably this fib level right here, $1.59. I think that's a layup, and that would bring you about a 20% return from this level. If you were to step in here, and again, if it forms this double bottom by the close and then pops back up, obviously that would net you about a 20% return. And as much as I beat the company up, I'm honestly not exactly sure if it deserves to go lower than this. Because I remember I did say like 140, 150, because I just thought it was going to come down and test this bottom trend line. But as we see here, it broke the bottom trend line on multiple occasions. And even though it got back up here and immediately started to retest and then rebroke again. So I don't feel that there's a lot of confidence here in this company. And of course, if we look here, you have Canaccord Genuity just recently trimming the price target down to $2 a share from $3. Wells Fargo yesterday, price target down to $1 from $1.50, keeps underweight rating. That means it is going to perform less when compared to the major indices. So there you go. FuelCell Energy records 41% revenue decline in Q3, hit by lower product revenues. Lower product revenues, right? And a lot of people were trying to tell me, hey, listen, they're going to change the world and everything like that. And they still might. They still might. I'm not trying to crap all over the company. But again, if they were really rocking and rolling and they had some sort of proprietary technology that couldn't be found anywhere, and everyone and their brother was going to look for them to revolutionize their energy efficiency on their business side, well, let me tell you something. FuelCell revenue would not be declining 41% quarter over quarter or whatever the heck is going on. That's the point I was trying to make. If it really was the hot shit that you guys were talking about, well, then guess what? They would have consistently been increasing revenue and beating analyst expectations losses would have narrowed, and we would have been talking about bigger and better things. And of course, a day or two ago, you wouldn't have had 2-3 institutions come out and lower their price target. So this is what I'm saying. When negative numbers come out, it's followed by negative catalysts and vice versa. But right now, again, we may be in an interesting scenario, especially in the short term, because it does look like the 10 and 20-year yields have begun to slide today here, moving into the later afternoon, which, of course, bonds go down, stocks go up. So with these yields dropping, we now have all three major indices back up green and slowly climbing throughout the day as these yields continue to drop, which tells me chances are, you have a very high chance that this stock, something like FuelCell, is not going to completely crater and will be just held at a stable level here, potentially even flat. It might stay at $1.32 now for the next 2 hours and 15 minutes, but it will most likely not, in my opinion, go lower than 131 if the indices stay the way they are right now going into the close, which would mean that if that happens, then we have just confirmed our double bottom at $1.31, and now you will potentially have a short-term pop here, which of course is good for the immediate short term. But in the long term, also potentially seeing here that about $1.30 and change is now your all-time low, this now may potentially set you up to maybe add to the position, or again, if you were a newer investor and you were watching this one, it was $2 and change, now it's at the low ones, right? So now you're able to buy it at even a greater discount than you wanted to. So about $1.30 might not be the worst case, because even though revenue is coming in inconsistently, it is still coming in. And if they are forecasting bigger and better things down the road, $1.32 may not be really the worst price, because we're looking at a market cap here of a touch below $600 million, and I believe the company's equity is about $700 million. Right? So if we look at a chart like this, we can see, look at this, 43, 39, 37 million, back up to 38, down to 25. That's what I mean. So minus this little pop up to 38, revenue has been decreasing quarter over quarter essentially for about the last, four of the last 5 quarters. And now annual revenue here for 22 was 130 million. And now if we switch over here to 23, we have 37 million, and 38 is what, 60, 75? 75 million plus that is 100 million. Right? So now they have to do like 31 plus million to come in above last year's annual revenue. However, if we look, they're estimating 26.8 million. Now, of course, that really doesn't tell us anything, because this company is either going to post 35 million and beat estimates and show us on paper that revenue has increased again year over year from 2022 to 2023. Or the company could just completely shit the bed, as it's been doing, and they can post like 12 million or some crazy ass number like that, and then all of a sudden, their obviously revenue is lower year over year, and they're probably going to beat the stock up even more. But I wanted to show you the financials. There you go, random car going by. But again, if we come here, we can see the company consistently year over year for the last 4 years in a row is coming in below analyst expectations on the revenue side and on the EPS side, even though losses were significantly more back in 2019, and I'm happy to see that they jumped up since 2020. However, for the last 3 years in a row, the company has lost more than Wall Street expected. We saw the debt jump up to almost 200 million here in 2020, and now we see it's about half that. And the cash has jumped up as well, a couple of $100 million. And I did mention that one of the positives was that the company still seriously has assets outweighing liabilities, right? And if we added these up, you're looking at, 900 million in change, and you're looking at about 200 million in liabilities. So they have a very good asset to liability ratio. And that, in my opinion, is what is keeping this stock level right now, and will potentially, in my opinion, not cause the stock to drop lower, believe it or not. And I wanted to show Yeah, so as we see the losses widening here, right? This is what I mean. Even with the cost of goods going down with the drop in revenue, revenue minus cost of goods yields gross profit, and you can see gross profit here for the last quarter minus 8.2 million, minus this big quarter here at the end of 22. This has actually now been the worst quarter going back to the last 7-8 quarters. So, that's why as much as we want to escape these negatives, they're still here. This quarter the company did 38 million, operating expenses were 29.7 million. Now revenue drops to 25 million, operating expenses go up to 33 million. So now the operating expenses are the highest it's been since January of 2022. And this is what I'm saying. The company, in my opinion, was just dealing with too many freaking negatives. And that's why I was, I was 90+% convinced, at very, very high conviction, that this stock was going to go lower before it went higher. Now, again, it immediately went higher just because the company posted those earnings and, of course, gave it back. So, obviously, I did end up right, but I'm really not here to rub it in. I'm here to try to direct you to where, what I would do personally if I was involved with the company, if I had a situation like this. Now, this is what I wanted to show you guys. Right, so the assets have been bouncing around, was up to almost 950 million, drops down to about 850 million, now it's back up to 950 million. Liabilities were decreasing, was maintaining this 180 million plus level, drops down to about the 150 plus level, now it's back up to 177 million. But again, assets minus liabilities yields total equity, and as we see here, equity right now, 767 million. Which, going back these last several quarters, is the most it's been, going all the way back to early 2022. So even though the company is still holding some debt, if we come down here, we look at the book value per share, it's currently sitting at $1.57. And right now, as we see, the company is at lows of $1.31. So again, the book value is, if the company had to close its doors, liquidate everything in its name, and pay it out to shareholders, it would be worth $1.57 a share. Which, of course, when looking at a price lower than that, you would say this is a positive. However, again, the book value per share doesn't always dictate exactly where the stock is going to go. We have crappy companies that are trading at a very, very high price to book ratio, and we have decent companies that we can find that are probably trading like 1.5 times book value or something. So sometimes, the better companies don't always get rewarded immediately in the short term, but in the long term, it usually does pay off. But again, we're dealing with inconsistencies here with this company. So I would rather, instead of having it here at 130 and forcing my way in when they could potentially drop it down to $1.10 or $1, I would still wait for confirmation. If you're involved in the company, again, you probably got in for the long term, so you understand all of the short-term volatility and uncertainty that is taking place here currently. But again, over the long term, it could work out. But of course, as you can see, that this company might need some years here. And this is the price to book I was talking about before. As we see, the price to book ratio is now, again, sub 1, the lowest it's been. So this is why I'm saying, the fact that they brought it down to that 131 level about 2 weeks ago, August 28th, then they bounced it back up to like 150, 160. Now they're bringing it back down, but they brought it right down to that exact level again. This is what I'm saying. This is why right now I would watch it. And in the immediate short term, yes, you could have a potential double bottom pop and make some short-term profits. But in the longer term, obviously, it's really not going to help you out too much. Your main concern would be that you just need this stock to get back above this bottom trend line. That, in my opinion, obviously would prevent the bleeding. But even if it rides this bottom trend line, as you see here, the stock, we're dropping into now the 120s and potentially sub 120 going into these earnings roughly the middle of December. And of course, again, the fact that the company, they're posting 35 million, 40 million, now all of a sudden estimates are down to 26 million. I don't know. Again, I'm happy that revenue is coming in, but it's kind of throwing me for a loop at how inconsistent it is. So, so it's kind of a mixed bag here. But also, again, we have some price target trim, so I don't think that's going to really help its situation in the short term anyway, in the immediate short term. But switching over here to stock charts, and we can see that right now the RSI is slightly below 31, which may potentially be a buying indicator. However, again, you can see that the RSI was absolutely in the crapper just a couple of weeks ago. So also back here towards the end of April, it looks like. So you can't necessarily say that the RSI is the main indicator that you want to look at, because it has obviously been proven wrong. The MACD looks like it rose and crossed and has flattened out and is potentially on its way back down. Obviously, only time will tell. That is just a little prediction there. Looking at the RSI here on the weekly, it is at 32. So this is what I'm saying. This is why, they may have formed the double bottom at 131, and they could potentially, keep it flat or just hang it out for a day or two. RSI hits that 30, and then, boom, they pop it up. But hopefully for you guys, it doesn't dip below that 131 level, and it confirms that double bottom, and it gives you a little bit of life here in the short term. But several weeks back, we can see the MACD cross to the downside, and now we're potentially about to cross back to the upside. But again, only time is going to tell. I really don't know if it has the ability to get back up here to $2. That would be roughly a 50% move from here. However, it does look like at multiple times the stock rose up and tried to retest that mid-Bollinger Band. So definitely is possible, but more realistically, I would say from this level, if the double bottom is confirmed, you might hit that 159, roughly 160 fib level. Which again might not sound like a lot, but if you get in here and sell it there, that's a quick 20%. And nothing wrong with taking some quick profits here. Everything we buy can't go up 400 and 500% for us, right? So again, to reiterate, this is a trader's market. You have to be in, you have to be out. And for all my long-term shareholders here, I'm sure you might be hurting right now. But this is what I talk. This is again why I speak about these things the way I speak about it, right? Because the point of this is not to rub in your face. Oh, hey, look how right I am. You're a dumbass. You've been losing money, but I knew it was going to go down. I'm the best. It's not the point I'm making here, because if you think about it, since I made the video, and again, no one is always right, but since I made the video, you could have sold that stock for a loss and looked at other positions over the course of the last 60 days, probably made 40-50% of those losses back, and now if you want, you can re-step in and retake a position for the longer term in FuelCell. Right? Don't let the chips fall where they may, so to speak. You don't let the chips fall where they may and just take it as it is and take it on the chin and be a good sport about it. No, that's not what this is about. This is about making money. And if something is not making you money, you have to cut it loose and look for something else. That's what it all comes down to. No one is giving you any commendation for you buying this up here at $8-9 a share and just holding and going down with the ship, right? That is really pointless. That is really, really pointless. You could have sold out at $3-4. Yeah, you would have taken a 50-60% loss. Yeah, it would have hurt like a son of a bitch. Yeah, you probably would have made it back by now. And that's what I mean. You could have stepped in at this stock, even if it was at 1.5, 160. You could have stepped into this company. You could have now had a lower cost basis, and of the potential big losses that you had, you could have made some profits back and chipped away at it. And then, of course, if this thing actually starts to rebound for you, you're just going to be in an even better situation, in an even better position. So that's why you have to work smarter, not harder. And do not let the chips fall where they may. Do not just take it as it is. You put the chips where you want to put them. And if this piece of shit is not working out for you, you have to cut it loose and move on to the next thing. So, I'm going to end it there because we're just beating a dead horse here. But once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop them down in the comments section. I'm usually very quick to reply. Like the video, thumbs up, algorithm helps me get more eyes on the channel. Subscribe to the channel, that is our handshake agreement. I will do update videos on trending stocks. I will bring brand name analysis to your attention. Like I review Disney, companies like Campbell Soup, and also the Discord. Link is in the description of every video. Join the Discord if you'd like. And again, if I have any quick day trades or any scalp trades, I'll call them out in the Discord for you guys. I'll do all of that for you guys. All I ask, handshake agreement. Push the subscribe button. That is how you help me help you. But moving forward, more importantly, like I always say, I understand that markets are rocky and volatile and very uncertain. So I want to wish everyone success. Hope everyone makes a couple of dollars. Thanks for stopping by. I'll catch you guys in the next one.